Good day, everyone, and thank you for joining me to get an update on Superior Gold, and thank you for hosting us today. As a reminder, please refer to slide 2 on our presentation, which is posted on our website to view our cautionary language regarding forward-looking statements. Also note that dollar amounts in this presentation are in US dollars unless otherwise indicated. So let's move on and talk a little bit about our world-class gold mine. So Superior Gold is a TSXV listed gold producer which owns 100% of the Plutonic Gold operations located towards the northeast of WA. The Plutonic Gold operations include the underground gold mine, the Hermes open pit projects, and then also an 80% interest in the Bryah Basin joint venture, and now the Plutonic main pit pushback, which I will talk about a little bit later. We hold a large prospective land package along the Plutonic-Marymia Gold Belt with several other gold deposits in close proximity to our existing infrastructure. Moving on to the investment highlights. We believe that the key investment highlights of Superior Gold are the following. Firstly, Plutonic is situated in one of the top mining jurisdictions in the world according to the Fraser Institute. It's a world-class operating mine and was established with infrastructure that also includes significant latent milling capacity. The business has a clear and concise optimization and expansion plan and is endowed with significant mineral resource base with demonstrated exploration upside. Finally, one of the most compelling attributes is the re-rate opportunity we represent compared to our peers. In order to achieve a re-rate, our growth strategy target delivering 3 goals. And I'd like to expand on that a little bit. Firstly, deliver a safe, stable, and predictable operation between 70 and 85,000 ounces. That's our first goal. The second goal, an operation of scale with reduced all-in sustaining cost by increasing production to firstly circa 100,000 ounces per annum with a current 1.8 million tons per annum mill, and then taking it to the next step of moving up to 150,000 ounces by restarting the current shut down 1.2 million tons per annum milling circuit. This is expected to be achieved by increasing ore production, not only from Superior Gold's underground and open pit mines, but also from external sources. Lastly, it's important for us to invest continuously, but also invest smartly in the exploration of known high potential targets to expand our resource and reserve as well as our life of mine. I will explain a little bit more detail on how we can achieve that goals in a moment. Insofar as where we're situated, we hold a 644 square kilometers of prospective land along the Plutonic-Marymia Gold Belt. This is also important in the sense that there's several other gold deposits in close proximity to our infrastructure, and that is an important strategic advantage for our expansion, especially the fact that we have latent milling capacity. Now, expanding a little bit on the growth strategy. Our growth strategy at Superior Gold, as I said, is straightforward and well-defined and is targeting to deliver 3 goals. The first goal is targeted to put in place a strong base for further growth, therefore delivering safe, stable, and predictable operations. Now, in this phase, which is now, we believe, complete, we started working to re-establish the steady state production from the underground mine, and we're encouraged to see the return to a state of improving positive cash flow in 2021. In addition, the near mine resource extension drilling, mineral exploration that started last year, as predicted, provided future mining fronts for stable, cost-effective feed to the mill. Moving on to the second goal. The second goal is targeted to deliver an operational scale which produces in excess of 150,000 ounces per annum at reduced cost, improves cash flow, while strengthening the balance sheet. Now, Goal 2 is planned to be achieved in 2 phases. The first phase is set to see the production increasing towards 100,000 ounces by supplementing underground feed with open pit production from a number of near mill past producing open pits. These include Plutonic East, which we commenced on schedule in 2021 in the second quarter of 2021. Moving on to Perch, which we started in the fourth quarter of 2021, as well as now Main Pit Deeps, which we will start in the second quarter of 2022. In addition, we have an optionality into Hermes and Hermes South in the short term as well. The next phase is planned to increase the production towards 100,000 ounces per annum. Here we plan to recommission our second mill that is currently in care and maintenance, as I explained earlier. New sources of feed may come from exploration from our existing properties, but also from several other sources along the Plutonic-Marymia Gold Belt. The third goal consists of delivering on the exploration of known high potential targeted areas. There is a potential for a new discovery as we invest in exploration at Plutonic. We've certainly been very encouraged by our recent drilling results, which includes a third drill rig in the property dedicated to opening new mining fronts, and one may expect regular updates, as we've done on a quarterly basis, on exploration, as well as actively moving forward with the surface drilling strategy. It's important to share how we are tracking to deliver this strategy now. Well, firstly, Superior Gold has delivered the first goal. In 2021, the gold production exceeded upper level guidance at 77,000 ounces without any loss of productivity due to COVID. In fact, we've had no COVID cases whatsoever since the pandemic has started on our property. The underground production increased over the year in Q4 underground mining rate of circa 900,000 tonnes per annum was achieved. We now move on to Goal 2 in 2022. The first phase will target to increase the quality of the open pit ore, as I said, by executing on the early entry option at the main pit. Main pit deeps, once purchase complete in the second quarter of 2022. This will see open pit grade increase towards 2.5 grams per tonne, which is significant given that our open pit feed is currently at about 0.6 to 0.7 grams per tonne. It's also important to note that the open pit feed constitutes about 45 to 50% of our total feed to the current mill. The underground mine will expand its operations into new areas, up to 30% into new areas compared to 100% remnant mining in 2021. The underground is scheduled to deliver 900,000 tonnes in 2022, and that's up from 835,000 tonnes in the previous year. We also plan to run at an exit rate on the fourth quarter of FY22 of 1 million tonnes per annum from the underground mine. Gold production is guided between 80 and 90,000 ounces for FY22, with an exit rate of 100,000 ounces in the second half of 2022. The operational plan for FY22 is therefore designed to edge towards delivering the first phase in delivering operations of scale. We expect also to announce the updated resource and reserve, as well as the life of mine, towards the end of Q1, early Q2 in FY22, which will form the basis on which the next phases are expected to be delivered. Moving on to our guidance. Our production guidance for 2022 is set at a production, as I said, between 80 and 90,000 ounces. As the business is generating cash, we are reinvesting in capital and infrastructure. One thing worth noting is that our exploration spend has more than doubled year on year. In 2020, we did almost no exploration. In 2021, we spent about $3.7 million, and now edging towards between $7 and $10 million on exploration, which will put us up on the upper level of the framework within which companies like us typically invest in exploration. That will take us up to between $90 and $100 per ounce produced spent on exploration. Moving on to the next slide, and specifically talking about how we've improved production, I think it's worthwhile to look back and reflect on what we've achieved over the last few quarters, and that will give the investor also some confidence as to the measured and methodical way that we're going along in increasing our production, improving our financial position. Firstly, in the second quarter of 2020, we achieved about 60,000 ounces annualized production. That's increased to 83,000 ounces annualized production in Q4. Commensurate to that, with our costs coming down as well as our net cash improving, our net cash position improved from just over $8 million to now almost $24 million at the end of 2021. A very important project for us going forward is the main pit pushback. Now, I spoke a little bit earlier about the early entry or main pit deeps. Now, main pit deeps is a small portion, early entry, pulling forward cash flow from the main pit pushback to feed our mills in 2022. The PEA is now progressing towards completing the pre-feasibility study. We're looking at from a PEA perspective, about $82 million worth of investment, but that will provide 60,000 ounces over 6 years per annum for the operations. Now, it's very important to note here that the PEA or the main pit pushback ore is designated to be fed into the current mill that is operating. It's also worthwhile noting that this ore will come in at a very low all-in sustaining cost and therefore contribute to our strategy to reduce our cost and increase our margin. Talking about our latent capacity in our mills, it's worthwhile just showing what the plant would be able to do at different grades and different volumes. So at 98,000 ounces, we need 2 grams a ton in the first mill. If we were able to start the second mill, we'll edge up to 153,000 ounces. So that's a very conservative view with attainable recoveries assumed in that space. At higher grades, you can see the significant ratchet effect that will have in running even a single mill, but also then potentially starting the second mill. Insofar as resources and reserves are concerned, you can see there over the time that Superior Gold has had the mine, through the drilling program, we were able to increase our resource quite significantly. Reserve, to a large extent, has stayed flat over the last 3 years. In 2020, we did not announce a new resource and reserve statement. As I said, we will do that at the end of this quarter. And the main reason for that is the revision of the block model for the underground mine that we've now taken into consideration. We look forward to announcing these results in the next few weeks. I think a few upcoming catalysts, just to summarize. We have a number of them coming forward. Firstly, going forward, we expect to provide more regular underground exploration updates. We've done so on a quarterly basis. In fact, in Q4 last year, we had 2 updates announcing Indian access as a potential new area with easy access near the portal of the mine. We will continue updating the market insofar as our exploration is concerned, especially given that we will now not only do significant exploration underground, we're now moving to surface exploration as well. We expect more opportunities for improvement as we continue the full potential assessment to unlock the latent capacity in the operations. Over here, there's a specific focus insofar as open pit feed is concerned. As you can imagine, with the mills and the latent capacity we have, the open pits is really one of the big levers we can pull to increase production from the site. We also expect to be commencing and announcing results of our heritage surveys, which is important on the main pit pushback project, to make clearer the timing of exactly when the main pit pushback will come into operation. The resource and reserve, as well as the life of mine already referred to, will be available at the end of this quarter. And over the next 12 months, we have a healthy pipeline of development and exploration catalysts to look forward to. Insofar as our capital structure is concerned, you can see there our capital structure is really tight at almost 123 million shares outstanding. Our balance sheet is very clean. We don't have any debt. The warrants or the purchase warrants that were in effect has run out this month and is out of the money, and therefore we see further tightening of our capital structure. Insofar as analyst coverage are concerned, very significant coverage that we're getting there, and we're very happy with the coverage we're getting for the business. I think the important thing there is the average target price from these analysts at $1.21, and we were currently standing at about 87 cents. Still a lot of fuel in the tank to be able to increase towards that expectation insofar as valuation is concerned. You can see also there a number of our key shareholders that we have on our register. I think in closing, I'd like to just quickly talk a little bit further about our growth strategy. Clearly, we've delivered on goal 1. We're moving into goal 2. Really looking forward to delivering our 80 to 90,000 ounces this year, and more importantly, the run rate towards the end of the year, both from underground as well as total gold production. It's also worth reminding the audience that our spend on exploration will more than double this year compared to last year. So that's a significant uptick, of which not only mineral exploration underground will continue as we open find and develop new mining fronts for the underground and for the longer life of the underground, but it also refers to the entry now into surface drilling, which we will do on our own property and towards the south, where we identified 3 main targets. Now, that drilling is starting in April, May this year, and we look forward to update the market on those farms. I'd like to thank everyone for listening, and hope you have a good day. Thank you very much.